Jerome Powell just made a massive mistake, hinting that there will indeed be an interest rate cut in the month of September. Imagine cutting interest rates, with markets sitting at all-time highs, low unemployment, and inflation just beginning to reignite. Walmart's CEO literally said in their earnings call on Thursday morning that they expect to continue raising prices through the third and fourth quarter. Basically, if you don't own assets, good luck. However, that's my subjective opinion, and clearly the market disagrees. We got a brand new all-time high almost as soon as the J-Hole transcript was released. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan that aligns with the charts and what's actually happening, and not with what we feel like should be happening. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 3 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off today on the SPY weekly time frame, and all I've done here is adjust the chart so we can see this price action with a little bit more clarity. The April tariff lows are just off the screen there. So if we take a look at candle structure and location as we typically do, what do we see here? Well, in terms of structure last week, certainly a green-bodied hammer, which is quite interesting. This would tell us here that buyers stepped up towards the lows of the weekly range, and they were able to achieve a fairly impressive rally back up to the opening print, but they didn't stop there. They moved through the opening print for range expansion in the upward direction, and I would say achieved a very strong close in the upper portion of the weekly range. So structure is absolutely bullish. If we're thinking about location on the bar-to-bar count, we do see a lower low and an equal high here. That's probably more neutral than anything else, but on the higher time frame like the weekly, I would encourage us to just kind of sit back and say, is there any attempt, even through the sell side pressure we saw earlier on in the week, to change the weekly trend? And to me, the answer is a resounding no. If you bring out a couple of measuring tools, you can use a Fibonacci from the low here up to the all-time high and just see none of that sell side pressure even came close to attempting the Fib 38.2. So in my view, this is still going to classify as bullish consolidation up here. We can go ahead and throw on the anchored VWAP on the weekly time scale. And what you'll notice here is that all of the action is once again over all of the anchored VWAPs. We can come in here with our volume profile on the weekly as well. There's not going to be much to glean, of course, trading into blue sky territories. However, I just want to point out, if you take this high volume node here and extend it, the lower wick of last week technically acts as support right off of that level. So then where does the weekly trend actually become in jeopardy for changing to the downside? I know it might seem uncomfortable, but I would still use this previous high back here as the line in the sand for the higher low on the weekly timescale. Remember that when the market pulled back here, it never actually flipped into a daily downtrend, and therefore, if anything, this is a soft higher low on the weekly timescale. So something that looks like this, once again, probably uncomfortable for most folks, but in my view, on the weekly chart, still a great spot for a potential higher low. So let's get a little bit more granular then and take a look at the daily time scale and see what's going on from this perspective. Should we go with a breakout through the all-time high? Well, let's firstly evaluate this week's expected move. Is it bullish? Is it bearish? Let's see what we get here. I want to be able to see this low. Good. So the expected move is this gray box right here. If you're not familiar with this study, check out the video tutorial in the top right-hand corner. If we're contained by the upper bound, the number's at 653.63, implying a brand new all-time high and a higher high in the trend count. That's bullish. If we're contained by the lower bound at 636.99, that's also technically bullish, offering a very, very subtle higher low from what we have over here. So this then leads us to the next question. Did the daily trend change here, or is the daily trend still up? Well, this is a higher low in the daily trend count because this was our last equal low, right? You could look back here, and for all intents and purposes, I had been calling this an equal low. So from here to here, is this a higher low? Clearly, the answer is yes. And then the next question is this a firm higher low or a soft higher low on the daily time scale? Well, I don't know about you, but this was certainly an hourly downtrend pulling back from the all-time high in the trend count, and therefore, it's a firm higher low. So this is now your key line in the sand on the daily chart. As long as the market is over 634, the trend will remain up. If the market does decide, okay, you know what, let's go for a double top here, the trend will change to down when we bring in a lower low, potentially, this is all hypothetical, underneath 634. So if you're calling for a double top, just relax. It's not a double top until it is. You would have to break 634. And as we were just saying, based on the weekly expected move, not that we need to be contained by it, but if we are, there's the potential for a higher low here over 638.15, which would have been the ideal higher low on the daily chart, right? Pulling back from the high to here would have been a better look using this previous resistance as newfound support. We overshot it a little bit, but it's still a technical higher low. And you can see that we're trading back up into the equal high. So the trend remains up, and I think it's very clear that there was a bullish engulfing bar on the Friday session. We can all know and see that. And therefore, if we trade through the equal high, what should the market hypothetically do in the context of a daily uptrend? It should seek higher highs. And what would the target be? Well, we just have blue sky territories above us. There's technically a weak level or unrepaired business, you could say, here at the overnight all-time high, 647.15. You could use that as a potential target, but my goodness, that's like just a couple ticks over the high of Friday. So if we're going beyond that, I think it starts to make sense considering this some kind of daily bull flag, and therefore we could take a measured move based on that pattern. If we come from here to the pullback low, A, B, and C, those are your 3 test points, you can see that the measured move is roughly around 660. Now, am I going to sit here and say that we need to go to 660 in the coming weeks worth of trade? Absolutely not, but it's a hypothetical reference point that we could use as we travel and navigate through blue sky territories. In terms of pullbacks, if the market were to make a move in the downward direction and not trigger the daily trend reversal, again, it's 638.15 that I would need to see act as support. That would almost be a 100% reversal of the Friday breakout, but it would still yield a potential higher low over, once again, previous area of resistance that could now potentially act as support. Lo and behold, you'll also notice we have a sneaky little daily 20 SMA that could act as confluence for support around that level. If you were to ask me what's the picture perfect continuation of this chart, it would be consolidation in this range that then offers some sort of 1 hour bull flag breakout into blue sky territories. So let's take a look at that right now. On the hourly chart, you can see once again that we of course did flip into an hourly downtrend. You had highs, lows, equal lows, lower lows, potential for a lower high here. I would really just start to consider this a neutralization of the hourly trend, right? Because you had lows, equal lows, highs, technically a higher high than a lower high here. So if the hourly trend was neutral in this box, it certainly flipped back to up via the breakout on Friday. Now, the key thing I want you to think about here on that Friday move is the lack of rejection underneath the overhead supply. Put yourselves in the shoes of sellers who were actually able to nail the all-time high short. If anyone was short from this box, what's the picture perfect outcome that sellers would have liked to see? You can rally in here, you could take back, right, what goes straight up, comes straight down, goes straight back up, but sellers ideally would have liked to see a rejection off of that 642.75 to then offer a daily lower high. We had talked about that as a possible threat, but clearly on Friday, there was no issue. There was no hesitation, no nothing at 642.75. And clearly, the market put in even more bullish consolidation, not just over the level, but over this little incremental midpoint of the range as well at 644.50. Now, I'm not going to say that that 644.50 must hold to remain bullish here into the early stages of the week. I think you could break that. I think you could shake out some of the longs late to the party in this move, but clearly the main watch just has to be, does the market support here and do something that looks like that? If this is the case, and I would start to trade with this being the first primary base case to watch early in the week, if the market supports here, then I'm absolutely interested in trying to pick up longs at this level or looking for the continuation into blue sky territories on a Brigade bolt up and over the high of Friday session, as well as the Friday from now 2 weeks ago at 646.20. If this long right here wants to play out, then fantastic. We'll trade that for arbitrary 2-to-1s into blue sky territories, hopefully looking for a continuation play towards the upper edge of the weekly expected move, as well as the measured move target from the bull flag 660 that we were just talking about over time. Again, it doesn't have to happen this week, 660, but it's a reference point to the upside. A couple of things that we can make note of here. Of course, if we bring in a Fibonacci, what we care about is measuring the downdraft that took place earlier on in the week. I'm actually going to nail the low here of that Wednesday session. So if we take this fib, you can see that the 61.8 is actually underneath 642.75, and therefore, if the market were to pull back and hold this level, that to me would continue to remain incredibly bullish. Now, if the market pulls back deeper than that and actually gets underneath that level, I do still think it's possible to set some kind of daily higher low here, like we just talked about. Right, 638.15s would align with your 38.2, which I know we've taken the opposite Fibonacci here, but generally you could inverse this, right, to your 68.1. As long as the market does not close underneath 638.15, then the odds of 100% retracement are not really on the table, and this is your line in the sand Fibonacci. So that reinforces the correct level there at 638.15. Let's take that off. You could also just build the argument, right? If this is going to be some kind of double bottom, then a simple neckline retest is not unreasonable, right? You could trade shorts through the thin structure to get here. I'll actually show you something very interesting in market profile in just a moment. But then when and if we get there, that's the reversal point to say, okay, is the market going to remain optimistic and bullish? So we've talked about bull outcomes here, looking for continuation in the upward direction or a pullback to then support bull outcomes here for a very nuanced higher low. Clearly, you could probably build the case that, all right, the only time I'm really changing my tone to more bearish is on a break and Brigade bolt underneath 634 to change my tone more materially. That would be underneath the daily 20. It would be bringing in a lower low on the daily time scale and triggering that daily double top that we had just mentioned. From there, if the daily trend flips to down, we know that we're looking for a higher low still on the weekly time scale. So don't lose track of your different time scale priorities. The final thing I want to look at here on the intraday is the anchored VWAPs. Just to illustrate, as soon as that Friday bar technically opened and rallied to begin with, you were over the anchored VWAP from the low here, as well as the beginning of the breakdown on Tuesday. So Tuesday's opening anchored VWAP and then Wednesday's opening anchored VWAP had been recaptured early in the session ahead of 10 o'clock's breakout. From there, you can see the afternoon consolidation is taking place over the anchored VWAP from the 9:30 time frame on Friday. So once again, reinforcing that if you start to break underneath 644.50, not unreasonable that you at least get the test here at 642.75. If you break down below that, you're probably looking for this zone here as we had just mentioned. So anchored VWAPs are still supportive for buyers being in control, considering that we're above the entirety of the stack into Friday's close. Let's take a look at the market profile, market internals first. If you're not familiar with market internals, check out the video tutorial in the top right-hand corner. Now, this is where I have to dial back some of the bullish tone. Obviously, on the Friday session, there's a complete character change. I mean, look at the very neutral action that we saw here, neutral action that we saw here, neutral action that we saw here earlier in the week. Clearly smashing the upper bound of what we would consider substantial volume flows over trend higher zone, and the cumulative build is one of the strongest that we've seen in the upward direction, and it was not a sort of just morning shot like this and then flat all afternoon. It was kind of a sustained build through the morning rally, and as the market balanced, then it started to go flat, right? So sustained buying pressure across the NYSE exchange here. And remember, earlier in the Wednesday video, we had talked about how even through the sell-off Tuesday and Wednesday, we did not have strong sellers at the exchange level. I think that was such an important call out here, not wanting to get aggressively bearish too soon, right? And the idea going forward is, yes, we've seen this character change. I would certainly attribute this move on Friday. Stronger buyers are getting active, but what's the takeaway? You're over-correlated. Everything was higher on the Friday session. You're over trend higher zone, meaning that everything on the NYSE was catching a bid. So if everything caught a bid and you're losing that rotational aspect of the market, which is what really kept it kind of neutral through here, then is it reasonable that select sectors will likely pull back on Monday and some sectors might rally? The answer is yes. And that rotation should probably keep you managing expectations early in the week for just straight up continuation of the move. It wouldn't be unreasonable for this market to cool off a little bit, get back into a more balanced or trend-worthy state, not an over-correlated state, and then see some kind of move develop, right? This is indicative of basically volatility, right? Because if everything's correlated, everything's up, everything's down. Think about it from an emotional perspective. Buy everything, sell everything, buy everything, right? Just total flip-flop back and forth. You're going to get some pretty wild and violent moves in the index itself. When this starts to build a more responsible sort of look like this, or sideways around 1,000, that's much more of a sustained blend rather than everything all at once all the time. Okay, that's your market internals rotation. Clearly buyers getting involved, clearly other time frame, new money buyers seemingly getting involved with the sheer degree of volume flows that took place on that Friday session. I wouldn't fight this market in the upward direction, but I would be open-minded to a pullback or some sort of long entry from a lower price point once this overcorrelated state is corrected. A very clear illustration of this on the market profile. My goodness, I don't think I've ever seen, I shouldn't say ever, there were certainly some wild times back in the sickness era, but it's been a long time since we've seen a profile that looks as almost unhealthy as this. What I'm talking about is the volume commitment through this zone right here. There's a number of zero prints where there's quite literally no volume that transacted at certain price points, and the market just skipped right over and continued to move in the upward direction because the speed of the tape was just that fast. Now, it doesn't mean that the market needs to collapse through B period single prints instantly early in the week and oh my god, it's going to be this Armageddon pullback. But once again, knowing what we just talked about with correlations on the advanced decline line, it would not strike me in the slightest as being unreasonable if we took out this low here for the market to achieve some kind of pullback. And then the question just becomes, do you go to halfback? Do you go here? Do you accept underneath this low here, which would be the high of the Thursday session? If the market accepts underneath that, I would say we're in trouble and this was just a big fake out. Pay very close attention to your neckline, which would be closer to 63.35s, right? So that is the market profile take. Very, very top heavy. Think of it like Jenga almost, right? I know it's maybe a silly analogy to use in the market, but this is incredibly top heavy. All it will take is one loose block down here, and I don't want to say the whole thing comes tumbling down. I would never want to be, that sort of emotionally driven or using words that are emotionally charged like that about the market, but you could build the case that a pullback might be imminent, right? Again, very, very thin structure through those B period single prints. This is a P-shaped profile. We would classify this as primarily short covering. So you could say old business was being transacted here. And then I would really say because the volume flows remained extremely elevated into the close, this probably still just would indicate to me that new money buyers are likely getting involved up there with the prospect of a rate cut and basically inflation still maybe coming back. A little bit subjective here. This is moving away from objective market analysis, moving a little bit towards subjective take and opinion. I think you have a number of people rushing in who are just like, okay, the writing's on the wall. You either own assets and they appreciate with this inflation run and you sort of do okay, or you don't own assets and you get left in the dust, right? So that's my take here on the market profile and what we have. We have great excess in the A period lows, decent excess in the E period high. If we just zoom in here, just want to show you a couple of TPOs of excess up there. Could be better, actually. Could be slightly better. Some excess, but not as good as it should potentially be. It was technically a new all-time high. All right, so to me, that would indicate the auction is improperly finished at the top end. It wouldn't be shocker to see that move in the upward direction. I guess some basic things to just consider as well. Point of control did shift higher with price. Value did shift higher with price, which is completely opposite to what we saw on the Thursday session, where value was unchanged inside of this range, even as the market tried to rally here, early in the session at least, towards the top portion of the Wednesday breakdown, right? So value was completely unchanged inside, clear shift in value to the upside, all right? So those are the takes on the market profile. Let's get back on over to the platform here. Let's finish up our broad market. Let's get into the QQQ weekly time scale. This is where things get a little hairy, right? There's a clear divergence. I'm not the only one talking about it. Everybody and their sister's mother's brother can see it. There's a clear divergence in the NASDAQ. Maybe not so clear on the weekly. You might build an argument that this looks somewhat similar here. Clearly, the candle color is just different, but you do still have a hammer. So buyers stepped up towards the lows, pushed prices back up towards the highs, but they were unable to recapture the opening print on the week. So that's kind of a strike one in terms of resiliency, like the S&P. You'll notice a much clearer lower high, as well as a much clearer lower low on the weekly bar-to-bar count. That's certainly more bearish there. So the two data points might neutralize to saying, okay, it's not the end of the world, but it's certainly not as strong as the S&P. Clearly, the weekly trend remains in the upward direction. If you come in here with a Fibonacci from low to high, just like we did in the S&P, all the action is still taking place over the Fib 38.2, so I'm not overly concerned about it quite yet on the higher time scales, but I think there's an argument to be made that tech is certainly slowing down here. Just like in the S&P, so long as the weekly chart stays over this level, closer to about 540, 541, I would still qualify that as a weekly higher low. If we quickly throw on the Anchored View app stack, you can see we're above the entirety of it, but with a much cleaner test of the Anchored View app on that Friday. Well, it's really the Thursday move that then launched from there on Friday. The low of the week was right off the Anchored View app from the breakout back here over the inverted hammer highs. So a little bit of relative weakness, and I don't think that's much of a shock, right? Let's come into our volume profile on the weekly time scale. And what do we see here relative to this high volume node? Still acting as support, but where did we close relative to this high volume node? I don't want to split hairs with you, but if I hover my cursor on the top end of it, we technically closed underneath that high volume node. So a little interesting there. Certainly much more of that bearish inverted hammer look in the week prior anyhow. Let's bring it on down to the daily time scale here for our NASDAQ side of the market. And this is where it becomes abundantly clear just how disjointed the market is between the S&P and the NASDAQ, right? Clearly, in the S&P, the Friday rally brought us right back to the all-time high. And again, a lot of people are talking about this. This is not something special, but you should certainly respect it for what it's worth, right? So the key questions might remain. Well, let's first start with the weekly expected move, then we'll get into the key question. Upper edge, equal high, so kind of neutral to bullish there. Lower edge, equal-ish low to the breakdown from last week. I'd be neutral on expected move here for the upcoming week. The numbers are 582.40 FYI, and then down here 561.52. Okay, so back to those key questions. What's going on here with the daily trend? Is the daily trend in jeopardy of flipping to down? I think the answer is yes, and we can kind of all see how the path might unfold. This is still a pullback from the highest high, the all-time high, in the trend count, but on this rally, I would certainly be concerned about the potential for rejection in this zone, and it is going to be treated as a little bit of a zone. I've really dimmed back this previous level here that's at 574.50, but it's the origin of the breakdown on the Tuesday session that matters most in my opinion here at 576.50. If the market in the NASDAQ side of things is unable to retake that level, and let's just say on the hourly, produce a little head and shoulders like that, then the major pattern is also going to be a head and shoulders, right? And again, many people are probably going to be talking about this, but you should just respect it for what it's worth. In the NASDAQ side of the market, there is relative weakness. There is no rotation to keep the NASDAQ afloat. In the S&P 500, there is rotation. So if you're trying to select markets to be bullish or bearish on, I think it's abundantly clear that you should be more bearish in the NASDAQ, not overly bearish, because we'll talk about what's going on here. Not overly bearish, but more bearish than the S&P. The S&P, you would be more bullish than the NASDAQ, right? So your key levels here on the NASDAQ daily chart simply are going to be 576.50, that threat of a daily lower high, and then here, 566.50. If we could support above that, you still maintain some sort of optics for a higher low, right? From here to here was technically a higher low. Notice that you've closed just a hair over the 20 SMA, the orange moving average on the screen, rather than never really breaking through it meaningfully in the first place, right? Very, very different picture here in the NASDAQ side of things. So with that, the daily trend is still technically up. We're trying to navigate back to an equal high. Let's get closer on the hourly chart and just see what we're left with. So all things considered, is this an hourly trend reversal back to the upside? The answer is yes. So we've gone from an hourly downtrend here to an hourly uptrend, which means this is your firm higher low on the daily time scale, and we cannot violate this area here, roughly 558.85. I would not want to see the market underneath that on the NASDAQ. Otherwise, you're likely breaking down from some kind of rejection here, and then the double head and shoulders, would be playing out. We'd be under the neckline. Okay, but because we're in an hourly uptrend, right, and that took place, if you want to consider this double bottom over the neckline, therefore, the next hourly higher low needs to be where? Here, 566.50. That could also constitute, let's just say we get something that looks like this. If we get that, you also have your daily next higher low, and you maintain the daily uptrend, you maintain the hourly uptrend. From there, we navigate where? Back to the equal high here, previous all-time high level as well. We were just shy on the Friday session, 574.50. Then you're really looking for the final boss, so to speak. That's 576.50 here. So notice how this is different than the S&P because we still have to contend with the picture-perfect spot for sellers to produce that lower high. In the S&P, we moved here, and we negated any potential lower high underneath the balance range. In the NASDAQ, we obviously didn't do that, and therefore, if we get some kind of reversal that looks like this, there's your right shoulder for the daily head and shoulders, right? This is your lower high relative to what we have here. And this push and pull, is likely what we'll have to pay attention to into the next week's worth of trade. It's either going to resolve, and the market will do this. This would be the bullish base case, right? Because we're trying to navigate on the daily for an equal high. If we get follow through, if we seek a higher low over 576.50, if there is no rejection, then we look for the equal high, all-time high 582.80. If we reject underneath this area, once again, I would probably change to bearish underneath this for the straight up retracement underneath 571.25, seeking shorts into 566.50, reevaluating. If the market goes through, now we have the head and shoulders. So this juncture right here is what it's all about in the NASDAQ in the upcoming week's worth of trade. Matt, what if we just immediately crash and look something like this? Then fine, that's it. That's your right shoulder right here. It's a pretty wimpy right shoulder, but that's just what it's going to be. So 566.50, same levels we just talked about on the daily, and then 576.50 are your two key inflection points. You have a couple of helping levels in here, 571.25 we just talked about, and if it is upside, if the market can recapture this level here, it has to be a bullish signal, right? Market participants are voting with their dollars. Nobody is overly concerned about the all-time high breakout rejection. If we're over 576.50, I would expect new highs in the NASDAQ. That's my general premise here for you. Let's take a look at some differentiating aspects. Like if we come in from here to here, you can see that we're still underneath the fib 61.8, whereas the S&P is clearly at the 100% retracement. So you still have that opportunity for a bearish daily lower high should the market decide to reject 576.50 and then ultimately get back down underneath 571.50s as well, 571.25. If we come in from the low to high, let's just check in on this one because it's slightly different than the the same A to B read like we had in the S&P. Fib 38.2 is slightly above the neckline of this as a double bottom. I would just generally remain bullish on the hold over 566.50 if that's the first impulse. It's down, right? Something that looks like this, a support hold back up to the equal high. All right, let's check in on the anchored view apps intraday. We'll have a different picture here as well. There we go. Notice that we're above the stack, but by a slim margin, right? Any sort of slip up on a pullback immediately starts to question the validity of the move higher because you're underneath the all-time high anchored view app at that point, right? So that would be here at 571.25, reinforcing the same exact level anyways. It's also the anchored view app from the Friday session all on its own. Let's take a look at the market internals for the NASDAQ side of things. You can see the same picture, way over correlated on that Friday rally, but again, not even making a brand new all-time high. Huge volume inflows, the cumulative build nice and strong over here as well, not denying the strength of the rally on the Friday session, but it's just clearly different than what we have in the S&P, once again, purely due to that rotational aspect and just the lack of other sectors to pick up the slack in the NASDAQ. Let's jump back on over to the market profile as well, and shocker, looks the same, looks the same. Big difference here, only difference that I can really spot, is the massive poor high on that Friday session. If you zoom in here, there's no excess high, right? That D period's even a little bit deceiving. If you really zoom in, right, lack of material excess, no excess on the highs. So therefore, this is the improper end of the auction. I would expect that at some point, if we revisit the high of Friday, right, we should likely seek some kind of breakout. Now, where's that breakout going to? Well, if we just go back over here, right, to here. That's over Friday's high, over 574.50s into 576.50 for the ultimate evaluation of whether or not that daily lower high is going to persist. Okay, that's your market profile. Other than that, same thing, really thin structure through the B period single prints, zero prints on the volume profile in there as well. You have yourself value higher, point of control higher outside of the inside candle that we had from the Thursday session here. Okay, so similar commentary to the ES. We won't need to go through that whole thing again. Let's take a look at the final, I was going to say small caps, but final and most sensitive sector from the interest rate perspective, monetary policy perspective. Let's go to the weekly chart here and see what we've got. Let's just clean this up for a second for you. Let's turn off those dividend payments as well. So what's going on here? Certainly a nice break in the upward direction, probably the strongest weekly looking chart that we've had all analysis thus far. Solid green bodied bar, very minimal lower wick, very minimal upper wick, even less of an upper wick than the lower, of course. Very strong close at the highs of the weekly range. Bullish. Has to be bullish in terms of structure. Location, completely different to the NASDAQ and the S&P. Both a higher low and a higher high, and a close completely outside of and above the prior week's range. Is anybody shocked here? Probably shouldn't be, noting that small caps are more sensitive to Jerome Powell's commentary, and Powell basically said, hey, small caps, you get the pass, right? That's basically the gist of the conversation at Jackson Hole. Is this possibly inverted head and shoulders? Is this possibly a more confident break through the neckline? It's possible. This is the all-time high up here. I would remain bullish small caps so long as we're over the top end of this balance range, which we've been talking about for the last, 3-4 weeks, right? So as long as we're above that level, no issues. We are still in a weekly uptrend off the lows. This was a more confident higher low on the weekly chart because the daily did flip to down via the breaks underneath these lows. And of course, it was coming from equal highs. So higher low is here. The next ideal higher low on the weekly is just over the top end of that range, which is closer to 225.50. We know that level from the daily balance. In terms of our Fibonacci's, a couple of things to point out. Obviously, I don't need to even do it, but if I measure from A to B, we have a 100% retracement of the down move there, and we're clearly going to be over the fib 61.8 if we do this as well from here. If we come in from the lows up to the highs, this pullback, although it wouldn't have been there prior to this new high here, it's over the fib 38.2, just meaning that if we do pull back here, no issues. I think the final one we'll evaluate is from here to here, and obviously fib 38.2 is right on the money with that 225.50 spot, just perfect confluence great spot for a potential higher low to continue this trend in the upward direction. Let's jump into our anchored view apps on the weekly IWM above the entirety of the stack. That, of course, is bullish. And we can come in here with our weekly volume profile as well, because it's different on smalls being underneath this all-time high. We are over the high volume node, and the next real spot to get through would have been right here, the unlock, so to speak, through the thin volume back here. And this changes a little bit. Let's just make sure we're not missing it. Yeah, it changes a bit there. The unlock for upside, similar spot. It would have been the previous week's high. We're over it, and we closed over it as well. It's the top end of this previous range as well. So all things considered, small caps shaping up here in a bullish manner with permission, basically, from Jerome Powell. Let's go on down to the daily chart, and let's see what's going on here. Weekly expected move is off the screen. It's that bullish. What do we see? Certainly upper edge is at 239.88, higher high in the trend count. If we have the low, it's at 229.78, higher low in the trend count, bullish from an expected move perspective. If we pull back, I mean, just look at the bar. It speaks for itself. New high relative to this pullback in here. This was the breakout of the balance range break. Brigade bolt above. We remained neutral on the inside candle from Thursday. We were not bearish on the close back over 225. And then from there, it's history, right? Over the top end of this range at 228.65s, over this high, over the weekly inflection point high at 230s. All things considered, very bullish breakout here on small caps, on an increase in volume as well. Obviously, volume was running rampant on that Friday session. So all things considered, I know I've said that a few times, a mild pullback still offers a higher low in the daily trend count. This is a brand new higher high. And should we just seek upside continuation, 239.10, 242.32, and then 244.98 is the all-time high. Who let this sneak by? Round numbers only up here in the office. You know that. So really nothing bearish to say about small caps. And as we know, my main use of small caps is just to say, okay, let's use this as either a helping tailwind for the S&P or a harmful headwind for the S&P. So all things point to north on the small caps thus far. Again, even on a pullback, you could sustain a higher low. So then it maybe sort of leads to the question, well, where do we change from the base case that it's no longer bullish? I would say it has to be a failure back underneath 225.50, turn all of this into a failed breakout. If we're here, I mean, you've got a massive opportunity for head and shoulders like this. That would become concerning. We're not there yet. Let's take a look at the hourly chart. Obviously vertical on Friday. Nothing to really glean from that. Straight to this 235 spot, which is a weekly level off to our left. There's really not much to talk about here. If you pull back, there's no levels. There's nothing to support the market in here. It's going to either be an arbitrary high or low, or we're going to come back in and test something like 228.65. And once again, that still maintains bullish optimism for the S&P, noting this is a higher low in the Russell daily chart. In terms of our Fibonacci's, we can come from the pullback low to the high here. Fib 38.2, this might be an arbitrary level that we want to have on the charts. Something like 230.83, so call it 231s. If we come in here from, let's maybe come from this fake breakdown low, the labor report low up to the high. Just reinforcing the Fib 38.2 is at the balance range highs, 225.50s. That's all set. We can come in here with our anchored view apps intraday as well. And you'll just see that from this low and from this breakdown here, right here at 228.65. So again, it's either going to be arbitrary in here where there's no structure, or we'll get the full retracement, which is fine, up against that 228.65. So that's the number to beat in the IWM small caps. Let's take a look at the Russell side of the market internals. See what else we can glean. No change, same commentary. No change, same commentary. A little bit more of a weakening out of the cumulative build on the tick into the afternoon. I'm seeing this for the first time with you guys here in the analysis, and that actually not overly concerning, but I mean, my goodness, that's not what you want to see. That would kind of indicate more so just a short squeeze here out of small caps, right? Short squeeze and then fade. No one's actually, there's no new money buying activity here into the close, right? Sort of, this alone is like, okay, volume flows are good, but this paired with it doesn't really give a warm and fuzzy feeling up there on the sustained move higher. So I'd be very cautious of like looking for that pullback and sort of being okay with the market coming back and rotating through that thin structure. Right? Really, actually, a pretty disappointing cumulative build out of the tick on the Russell side of things. Let's check in on the volume and market profile. You can see the same exact thing. Zero prints in here. I'm sure it's riddled with it. High and tight consolidation into the close. Point of control. Just everything about this. Jenga blocks. Seems like it's more easily. Remember, this works on a spectrum. More easily, more difficult. More easily, this can seemingly be toppled, and rotations through that B period single prints would be reasonable, right? Again, look at this volume profile. It's unbelievable. I like almost can't even zoom in. 11, 10, 2. Right? That's basically a zero print. When I say zero print, I'm talking about this stuff. There's no volume transacting at these levels, right? So there's nothing here that's going to hold the market up 4, right? You start to get a little bit more towards value as you move up the chain there. 2, I think we talked about the 2 maybe, but those like really, really thin. There you go. There's an actual example of no prints, right? Nothing, literally nothing on the Russell profile. So like if this comes in and you're shocked and you're like, oh my God, I can't believe the Russell's pulling back through that big move, it's because there's no volume here to support it, right? And the market needs to figure out, okay, do people actually care about these prices or do they not? All right, so that's the look at the Russell. I think it aligns with everything we've been talking about. You can't expect the market to just go up in a straight line forever. It's not how auction processes work, and the structure is just really poor, basically, underneath us based on what we've seen. So the tone is bullish. I think in summary here, right, the tone is bullish, absolutely. However, it would not be unreasonable for some things to start looking like this, some things to be looking like this, and then this, right? And it really starts to get ugly, and you'll hear me change my tone. I'll certainly give you guys the update in the Wednesday midweek market update video should it become necessary. But under 634, you won't be hearing me talk about bullish outcomes anymore because the daily trend will have flipped to down underneath this pivot low. But for now, base case, consolidation, Brigade Bolt. Pullback, fine, higher low here, recapture, new all-time high breakout. That's your base case. All right, let's move into our sectors and see what's going on with the sectors in terms of weekly performance. Let's give this a little ordering by performance. There we go. So leader of the week is energy, up 3.56%, followed by materials, followed by financials, followed by real estate, followed by discretionary, followed by industrials, followed by healthcare, followed by the bond market, followed by consumer staples, followed by utilities, followed by communications. The reason I'm going through this exercise, what was the laggard of the week? Who underperformed on the week? Not good. It's your technology sector, it's your semiconductor sector, right? So the heaviest weight components of the market that led the entirety of this rally, basically the rebound off the tariff lows, no longer performing well at the highs. Is it an, oh my goodness, throw your hands up in the air, short the market into the ground, and oh my God, it's going to zero? No, but it's definitely a small white flag that I would want you to be aware of in terms of posture here in the market. Now, if we sort this by the performance on the Friday session in particular, when the market went for that ripping rally, you can, sigh of relief, right? Discretionary, that's risk on. Semiconductors, risk on. Energy, Materials, Tech, actually outperforming the S&P 500, right? So not all hope is lost, but the weekly performance, I think, totally aligns with the conversation we already had in the NASDAQ chart itself. Let's check in on these structural charts and see what's going on. Have to be bullish here on discretionary, clear uptrend, clear recapture for a higher low earlier in the week, right up against 227. We talked about that on Wednesday. No problem. Semiconductors. Obviously, the threat is that it has the potential keyword, for a head and shoulders. It's not a head and shoulders until it is. You need to break the neckline. You need to be here. I'll be screaming from the hills, hey, it's bearish, right? But for now, it's just kind of bullish consolidation here, holding up over the previous all-time high. If we can get more price acceptance over 293.15, consolidation here, I'd be even more optimistic and open-minded to trading longs back into the all-time high, right? Let's move along to the energy sector. No comment, inside the range, not hurting the S&P. If we look at materials, equal highs here, a breakout would be bullish. It's one of the lighter weight sectors, not hurting the S&P. Still a bull thesis there. You could even say, obviously, with very interest rate sensitive home builders being related to materials to some degree, nice breakout here, new high on Friday. Theoretically, this would indicate that the cyclical side of the economy is looking forward to lower rates and building and all the processes that come with that, resuming at maybe a higher degree. But again, as we said in the introduction, what does that come with, unfortunately? Lower rates probably mean higher home prices because, you're not just going to have, financing costs are down, we're going to keep home prices the same. It doesn't work that way. So they're going to squeak out every penny they can from you, and don't expect housing prices to come down if rates are going to get lowered. So you either own assets and you're like, okay, we can get through it, or you don't, and it's going to be rough. Maybe that's a little bit too pessimistic, and once again, that's my subjective take, but that's kind of what I see it as when Jerome Powell says with reigniting inflation, hey, we're going to lower rates, right? We don't care about inflation anymore. It's the labor market. And yeah, the NFP is a little bit weak and starting to deteriorate, but jobless, unemployment rate is pretty low. It's like, come on, really? More on that when we get to the Fed watch, but XLK, certainly similar to the QQQ. Your key level here is 263.50. Sorry for the rant. We'll try to speed it up and recoup some time. Again, it's not a head and shoulders until it is. That's underneath 256.50. If we take a look at the XLF, chart looks great. Break out the brand new all-time highs. How are you bearish if the second heaviest weight sector and the financial sector overall is doing well, right? Obviously bullish for the S&P. Industrials breaking out of this little consolidation here, bullish for the S&P. I would become concerned if the daily double top emerges underneath 148.25 here. Let's jump into communications. Not a new high, but making a move back up over the hourly head and shoulders that was happening here. So over 110.50 is bullish consolidation. If it pulls back, this is just weekly consolidation here over the prior building block there. Let's take a look at real estate. Again, rates going down means home prices up, and wealth effect probably comes back into play. So that is certainly noteworthy here. Real estate still in the range, though. No breakout over 42.70s yet. Not hurting the S&P. XLV, healthcare, it's no longer the second heaviest weight sector, but it is at the top end of the range. It's got multiple back-to-back upper wicks, inverted hammers, sellers stepping up towards the top of the range. I've been talking about this with the group for a while, but I think healthcare, euphoric on the whole Buffett thing, UNH thing, but where are we? I mean, we're playing ping pong in a range. What would be the first logical thing to happen here? A pullback, right? Upper wicks starting to get a little bit nasty, top end of the range. I would not be overly hopeful of a breakout here. All right, if it happens, then fine. It's upward pressure for the S&P, but I don't think it should be the base case. Let's move along to the TLT. No comment on rates, really. I thought that there was going to be some sort of more substantial move higher in rates. Powell totally sort of like just bending the knee, I guess. But anyways, maybe that says more about more about me than anything else, which is why in the intro, we said we're just going to trade the charts in front of us, right? So the chart in front of me here on the TLT, it's just range bound. So therefore, I really don't have anything big to say until we're over 88.25 or under 85. Let's move along. XLP, failing the breakout here, probably on the Walmart commentary from earnings. Higher prices are coming, and maybe we rotate back into the range. Failed breakout certainly would apply a little bit of downward pressure for the S&P, but remember rotation. If the XLK, if the SMH are going to pick up the slack in the meantime, then this would be fine. Right? It would not really be an overly big red flag for the S&P. Utilities, no comment here, stuck sideways in the range, a non-issue. Let's jump into the ratio charts and see what's going on. Do we have a flip to risk on, risk off? What's the deal? I would say the XLY is probably the most bullish of these charts here. This is losing some of its shine. That's the XLK ratio to the S&P. So underperforming there. It's not quite a full risk off flip because you're not overperforming in staples and you're not overperforming in the utility sector. This is starting to get a little bit of a curl higher, but it's still in a downtrend, so it's hard to call that bullish yet. And then this is just kind of neutral here in comms. So, not overly risk on, like let's start flying to the moon, but still think it's generally not risk off. And I think that's the difference, right? There's a difference between like risk on, oh my God, let's just up and away, everything's all good, versus saying like, okay, risk on's not really all the way there, but, right, it's not risk off. Right, so we're sort of like neutral, kind of caught between that. If you take a look at these specialized ratios, you'll see something similar where the trends are starting to neutralize in the white boxes that I'll draw here. You'll notice that we have equal lows and equal highs rather than higher highs and higher lows. So neutralizing in these white boxes, once again, I'm not risk off. I'm not saying, oh my God, the market should crash and burn and go to zero, but it's just not as bullish as it was through these rotations in here. Now that could change if the markets go on to produce new higher highs in these trend counts. And that might be the base case, considering that the uptrends are still intact on the 50 SMAs. That's all the gold moving averages that you see on these charts, but we're just not there yet. Let's take a look at the B set. You can see that gold had a small downtick, as did the TLT ratio to the S&P. So still bullish from this perspective. If we look at Bitcoin, I do want to go full screen here on a daily chart. Bitcoin quite enjoyed Powell's commentary and the prospect of rate cuts here, keeping me in a Bitcoin swing trade by like a razor thin margin. I was practically ready to just go to my Coinbase account and say, all right, that's gone on the Powell speech. Should he have been a little bit more hawkish? But hey, the trade lives on, and so far, still looks like a successful retest for a higher low on the weekly, right over the top end of the breakout range here. So Bitcoin is still indicating risk on as of right now. Let's jump into some dollar and rates. There we go. Lower dollar here, obviously, on the prospect that interest rates are going to get cut. So this classic, once again, you better own assets. Otherwise, what's it gonna be, right? Inverted ZT moving lower, not a shock there considering what Powell said. And if we take a look at the Fed watch tool here, you could just see some of the madness that's been going on. We're back to about 89.2% odds of an interest rate cut in the September timeframe. I took a screenshot of this before the Jackson Hole Summit, and you could just see that a week ago, August 14th, 92% odds. Then we got the hot PPI print. We went to 82 and then 73% odds. And all it took was Powell to say, nope, we don't really care about inflation anymore. And we're right back to 90% odds of a rate cut. So the other thing I want to maybe just mention is like, yes, a rate cut should hypothetically inflate assets maybe a little bit. Same thing, housing prices. We just talked about that a little bit on the home builders. But is one 25 basis point rate cut going to like dramatically skew the conversation? I don't think so. I think, it might have been a little bit out of line to say that like, oh my God, he should like keep rates the same or even hike rates or such. I think the issue is what we've been seeing from very loud voices that are like, slam rates lower by 300 basis points. The Fed funds rate should be at like 1% max. That's going to be an issue. But a 25 basis point cut from what the Fed sees as maybe still being restrictive, I still maybe don't agree with it fully, considering every data point that we've looked at, but maybe I'm wrong, and that's okay. Like, I'm here to trade the chart in front of me, and we'll hopefully continue to do that in the S&P. I'm just a little flabbergasted by what the Fed and Powell has done here. I mean, pretty firm in his stance in the previous meeting to say, like, you're lucky if you even get a rate cut this year, to now saying, yeah, next meeting we'll go with a rate cut and maybe even more beyond that, right? So that's my take. You could see in the commentary here, this is the Fed's view, right? I've highlighted the statement here. They believe that policy is in restrictive territory and, may warrant adjusting our policy stance is basically Fed speak for saying we're going to change rates in the next meeting, and everybody knows it's not going to be an uptick, it's going to be a downtick, right? So that's the certainty that the market's keying into here. And of course, they'll throw in this as a sort of a safeguard, but that's the statement, right? That's what the market wanted to hear, and that's exactly why it went straight in the upward direction into the short term. As we look forward to new economic data this upcoming week, new home sales, it's not going to move the needle yet here on Powell's commentary. Durable goods orders, so a pretty quiet front half of the week. We start to get the usual stuff on that Thursday session, jobless claims there. And then PCE is going to be pretty well known here based on CPI and PPI from earlier on in the month. So not overly concerned with economic data this week. I think that we just want to continue to keep an eye on the jobless claims to see if we do start running into a labor issue, in which case then, yeah, maybe it does make sense to cut rates a bit more aggressively. But as of right now, right, yes, there was a miss last week, but have we seen any move over 250? No. We had these consistent misses to the downside here in the earlier stage of the month and into the end of July. Let's continue along into the earnings calendar. Obviously, everybody should be on the lookout for, there it is, your top dog, the one stock to rule them all, NVIDIA. Jensen, let's see what he has for us on that Wednesday session after the close. It's going to be the all eyes on name. I would say that some other honorable mentions, so all of these are honorable. Maybe Snowflake, maybe CrowdStrike, maybe Marvel on the semiconductor side. Probably don't care about Dollar General after Walmart's report. Maybe Dell. Ultra caught an upgrade recently. Maybe Affirm. Sentinel because of the buyout talks recently. And possibly these here. That's it. That's all I've got for you on the earnings calendar that I would pay attention to. All right, but the main event, everybody's going to be salivating over this one. NVIDIA, what do they have for us, especially relative to some of the commentary recently about the H20 sales over in China and the new prospect of developing a new technology that is compliant, so to speak, for the lack of a better term, to sell overseas there. We'll see how it all plays out. Let's get back into some of the technical indications, jumping into the bond market here first. Interestingly, and I suppose this is something that I have to pay attention to and remind myself of, the bond market's not really seeing that the long end of the curve has to do the heavy lifting or become overly concerned about inflation. If it was, then you would be seeing a breakout here in the bottom pane, i.e. FTLT. It's just not the case. So that's me talking to myself and saying, all right, maybe like hang up the inflation thing for just a second. Powell said in his speech, they're not going to let a one-time price increase really persist as just that, persistent inflation. So the chart would align with that. If we take a look at where we credit spreads, move in the downward direction here would be a vote of confidence in terms of corporate earnings, basically, junk and LQD corporate grade. So that's all set. That's risk on. If we take a look at them in isolation, bid and bid once again, it's a vote of confidence for corporate earnings, basically. Let's take a look at breadth. Nice uptick there on the Friday session. So it was a broadening out of the move, and we know that that has been the case, right? If you've been tuning into the channel, we've been talking about this until I was blue in the face. I talked about it in last week's video as well. As the market started to pull back in here, right? We were somewhat like, okay, we're over this level. And then as the market broke down, really Tuesday, Wednesday, we were just making note that there was no breakdown in the RSP. So if that's the case, then it's pretty difficult to build a compelling bear argument on the S&P as long as this trend remains up, which of course it did. You could go back and watch the Wednesday video. I'm not pulling that out of thin air. Just go listen. And in the group we added to our long-term portfolios actually on that pullback Tuesday and Wednesday. So QQQE, we do see a breakback over this key level. This was the concern in last Saturday's update video. 98.60 has been recaptured back in the upward direction. Let's jump into the volatility side of the equation. Big breakdown to be expected. We had a VIXpiration on the Wednesday session. Big breakdown here in the VVIX, volatility of volatility, and on the vol futures. Huge contangos across the board. Money managers are happy here, here, and here, breaking back down into the comfort zone underneath 1275. If you look at skew, I was actually watching to see if skew was going to see an uptick ahead of Powell, and it just didn't. I mean, this is people voting or betting on a black swan event. No uptick prior to Powell, which I found a little interesting into the end of the week, right? Just nothing here and just breaking down. So all things considered, base case remains bullish to up. With respect to the NASDAQ potential for a reversal, we will only deal with that when and if we break through the neckline of a head and shoulders and there's a confident trend reversal. Some concerns out there. Obviously, NVIDIA earnings this week. This will become a more difficult name to trade this week ahead of Wednesday. Do understand, I should say, that you're underneath the balance range lows still, back tested the daily 20. Hypothetically, this is the best spot for sellers to attempt a lower high. You could see it here on the hourly chart as well. As we start to navigate into this, all of this overhead supply, if sellers are like, nope, we're going to keep it underwater, that's where they need to step up. 179.25 will be a top watch into the early stages of this week. We do technically have an hourly uptrend via higher highs and higher lows, so I would say, okay, you reject here, that's great. I would start to look for shorts if you're actually underneath this spot right here, the afternoon consolidation at 176.50. Your Brigade bolt that looks like this will be how you play the lower high short on the daily up against 179.25. If you want to try to get it here on a look above and fail, not wrong, but I would just make sure it's actually failing and not accepting above, because if we accept above, I just don't want anything to do with price in this box, especially ahead of earnings. And once again, earnings have the ability to negate any of this analysis that we've conducted thus far. Let's move along to Microsoft and let's start on the daily time scale. You can see the pullback here has been pretty, it followed through underneath those weekly inverted hammer lows. Daily 50 is now in play and a nice upper wick on that Friday session. So not really the strength you'd expect with the S&P at the all-time high. Noting this is the second heaviest weighted company in the S&P. If this drops that 502.25, which is the last daily high or low in the count, I mean, the next daily high or low is here. You do have a grind to work through. I don't think it's necessarily the easiest short to pull off, but that's where you would hypothetically target 490. So not really seeing great strength out of Microsoft, and even if it does rally, right, this is still a huge spot for a lower high at 518.50, daily 20 as well. On the hourly chart, you're not going to really learn a whole lot other than potentially a failed breakout through the balance highs. You tried to break out, lower high underneath, bear flag breakdown here on the hourly time scale under 502.25 probably brings in that downside rotation we just talked about. Apple, let's start on that daily again. And let's just make note that you still have this thin structure underneath us all the way down towards this gap close and the balance range breakout. The Friday session's not the worst. It recaptured these lows and it closed above. Take a look now on the hourly chart. You can see this. So as long as you're over 227, I would be kind of neutral on Apple. You start fading underneath that, and I think that thin structure rotation comes back into play towards that 220.75. So that would be the Apple watch to the downside. If we look at Amazon daily charts, again, always worth starting on that daily. Nice low, equal low happening here. I generally would watch the 227. That would keep us over the daily 20. It would keep us over the breakdown level to close the gap from in here, and it would also keep the bullish consolidation intact. Right? If this pullback holds, you're not rotating through, once again, that thin structure. So 227 higher lows look okay to probably navigate like this over the span of time. If you drop 227, I think it's what goes straight down, goes straight up, comes straight back down. And you'd really just be retargeting this gap framework in here through 227 into 224.75. You could watch that. If this is going to be your double bottom neckline retest, that's your Brigade bolt on the hourly chart, but you're really just in a daily neutral trend if that's the case, because this starts to look like a lower high, of course. So please be not as aggressive on that 224.75 if price were to come back down and test it. Let's get into Google. New all-time high relative to this way back over here. So breakout to the upside, but failing to accept in the blue sky territories. I think that's the notable part for me, at least on Google. If we take a look here, you could see a little bit more of that aggressive afternoon pullback versus some of the other names that were sideways, or at least the broad market that was sideways. So if Google stays under 207, I would think that there's some sort of attempt at a higher low in here. Now note that your higher low over 201.80 is still intact, and I would honestly bring this level in here as well, around 204.25s. If we could support over that on Google, not the worst thing in the world. I don't want to get overly level happy, but it's like loosely in this consolidation zone right in here, you pull back and support, that's your higher low. So please keep an eye on 204.25. If you can support that, then do this. Great, bulls on parade, blue sky territories. The other thing to talk about is probably, no, it's Amazon, which we will get to. We just looked at Amazon, didn't we? Amazon on a weekly chart. Sorry, Amazon's weekly. Is it time for something that looks like that? That's all. All right, so Google's all set. Let's jump into Meta. Daily chart, looked into the gap, promptly failed. Obviously, the rally on Friday is going to help with that. I would really keep a keen eye out on that 745.50 from a daily perspective. As long as we're above that on the daily, I would think it's higher on the sellers failing to rotate through the thin structure, closing the earnings gap. If we look at the hourly chart, did we just mess something up? We did. Let's go to an hourly here. There we go. If we look on the hourly, it's fairly straightforward as well. It is the double bottom neckline, very similar to all the other patterns we've been talking about recently. If you hold it and then Brigade bolt here, you have a higher low, then you have a breakout through this thin structure breakdown over 754.30s. Ultimately, the target should be 769.75 with respect to 761.25, the lows of this range from here. Technically invalidated based on this breakdown, but I wouldn't just ignore that level. I would certainly maybe trim a little bit, maybe a quarter, and then see if you can hold the remaining to here and just try to navigate this thin structure retracement with respect once again to the number. If Meta is going to be bearish, it would have to consolidate here and then Brigade bolt into the gap, and I don't even love that. What I would like to see, if that's going to be a tradable outcome, I would like to see Meta go sideways for long enough first where the daily 50 is perfect confluence with that 734. That way the break and hold underneath, we're not shorting into the 50 SMA. I do not want to be short Meta into the 50. If we're breaking and failing the 50, that's a different story. Once again, that may align over time. It depends on how price evolves here. It may align with 734. Okay, that's Meta. Let's take a look at Tesla. Daily chart's been pretty ugly here. Obviously, Friday is going to make things interesting again, but the daily chart on this breakdown through here, there's a great short opportunity on the Wednesday session, but aside from that, really kind of ugly on the price action. If we take a look at the hourly, I think what's been left behind is some fairly thin structure. So there's two things to watch for. We're either going to hold over 334.50, which is that previous daily breakout level off to our left, form a bull flag, and likely try to get some rotation back to the equal highs here. That's one opportunity. Or if we drop 334.50, I think that Tesla has a thin structure retracement to 328. 328 being the lows and the origin of that breakdown from Wednesday. Technically, the neckline of the double bottom is much further at 324.25. But I do believe that if Tesla does this, let's just play hypothetical, there might be a short here from, let's just say, A to B. That's fine. We could take the short from A to B through the thin structure. At B, I would try to navigate back up to C, which would yield what? There's your inverted head and shoulders and likely higher prices after that. So Tesla on watch here. Certainly, if it just gets straight up continuation, right, I would not be long here, but the next Brigade bolt would be over 346.50, right? So don't chase it. Don't be a buyer into resistance, but rather let it do this, consolidate or whatever, and then that is your next trade here. Over 346.50, 356, 10 points of upside to trade for. That is Tesla. JP Morgan, banks, very ugly, very sloppy recently. I shouldn't even say ugly. It's a fine looking chart. It's got a long-standing balance range here. Kind of struggling around that 296 into the Friday close. Ideally, it would just be here and then here. It's upside pressure for the broad market overall. Let's take a look at Palantir. Palantir still has kind of an interesting dilemma on its hands. I don't think there's enough price information based on Thursday and Friday in this zone here where I would be, really willing to make a confident call on Palantir. You could also say if you just blend the last three daily bars, right, you're left with something that looks like this. Not the most compelling look via the Friday upper wick. It looked over this previous massive shelf of resistance, failed back below. So that gives me a little bit of hesitancy, but also this lower wick. Obviously, buyers started to step up. Previous resistance, support, same thing here, 144.75. So I think Palantir really needs more information in this zone and how it's going to resolve 160.15. Now, obviously, given the most recent reaction off of 160.15, this is a look above and fail. If we lower high underneath, I would expect the first rotation could be down here, noting especially the tailwinds look like this. We're not blind and oblivious to that fact, but I would not be aggressive on the short side until price actually takes out 152.50 for this thin structure retracement here. In my view, let's get some more information in this zone. If we get something that looks like this, there's a breakdown trade. If we get something that looks like this, maybe Palantir starts to work its way back up through that earnings, remember the earnings gap up that had closed back through here. Maybe we work our way back through that thin structure and build out a new trend. So that's Palantir in a nutshell. Let's move along to Broadcom daily chart. A little bit worse than NVIDIA, given the massive upper wick to end the session there. So rejecting this overhead supply, kind of in no man's land here. I really have had a hard time wanting to trade Broadcom recently. It's still the 6th heaviest weight company in the S&P, so I feel like it's worth watching and keeping a chart active on. But just nobody seems to be interested in trading the options on it. It's really that. It's the option spreads and just the lack of liquidity there. Anyhow, there's your rejection of the level. Coming back down into range. Neckline retest is 292.50. If you support there, you get a higher low on the hourly chart, and maybe you maintain some sort of bullish double bottom on the daily for up and over $300.75. That would be bullish, possible outcome there. If we're game planning to the downside, bearish consolidation here, that fails 287.25 leads to downside. If we look at AMD, a much better semiconductor to trade, I'm actually very interested in this chart early on in the week. We know that the daily trend has neutralized in this box. It kind of failed its bull flag breakout here. So I would say the trend is neutral with lows, equal lows, highs, slightly higher high. There's the potential for a lower high underneath 169.50. You could see it on the hourly chart here. Now, if this rejects, right, there's a short back down to the equal low. However, if we accept above, I think this is definitely a trade worth paying attention to, and it would also be interesting, simply noting, we're moving from the balance range lows towards mean reversion, right? So this follows the premise, basically, of how you trade a balance range. You want to be long off the bottom and short closer to the top, right? So this, supporting off the bottom, offering a setup through thin structure, aligns with the idea that we're playing the bounce from the lows back to the midpoint of the range, which is also a gap close in the daily 20 SMA. So I'd really be interested in AMD 169.50 into the early stages this upcoming week. Obviously, there's some work that needs to be done through this range here, but if we can get that, and then this, that would be certainly a chart to watch. Let's move along to Robinhood. Robinhood had a great reclaim on the Friday session and close above, most notably, this neckline of what we shorted as a double top. Right, so double top short in here worked out great on the Wednesday session, but now with the close back above the daily 20 as well, close above the Thursday upper wick, 107.50 is just now your key hold on the chart. You get pullbacks that support that level, and then you're looking for upside. If you just get straight up continuation over Friday's high, with respect to prior all-time high, there's really not a key level there based on the invalidation of the breakdown on Monday, was that? Monday's session? Whatever day that was. I think it was Monday. And then higher from there, you're targeting the all-time high. So that is Robinhood. I believe that this keeps us bullish. This is a trade outcome to the upside. If we just do this, also the same trade outcome to the upside. If we drop in here, I would start maybe identifying the head and shoulders and maybe make sense to be short here. I do just look left though and worry that, okay, market's not really acting cleanly in that structure for the sellers. Like the sell side was here, the sell side was there, and that was about it. Right, one and done, quick snappy move and already being bought back up over that 107.50. One thing to think about here is Robinhood is less about being tied explicitly to Bitcoin at this point and more about the transactions, more about assets under management, Genius Act opening up that path basically for more transactions to take place on the crypto side. So that sort of leads us into our first trade idea. Robinhood looks good here. What doesn't look so good is actually MicroStrategy, right? MicroStrategy, sure, I mean, a decent looking daily bar in isolation, but my goodness, let's not be blind and oblivious to the fact that this is going on here. So MicroStrategy has lost its shine, and I've been saying this for a little while now. CEO-wise, right, not everybody's a big fan of Saylor anymore, and instead, I think everybody's like, oh, well, why don't we just own Bitcoin itself? But you also just have this classic Brigade bolt underneath the neckline of the head and shoulders. So even as Bitcoin rallied on Friday, right, this was unable to reclaim some of its key structure, right? Bitcoin on a relative basis, if you were to just look at these charts back to back, I can actually do it over here. Let's jump into this chart, right? On a relative basis, if we go to a daily, Bitcoin moved from what would have been a double top neckline back to the midpoint of its range. Okay, what did MicroStrategy do? Well, here's its daily inverted head or regular head and shoulders. It moved after a break of the neckline to the neckline, rather than Bitcoin, which looked like, okay, Bitcoin is this, right? Bitcoin is here on an equivalent basis. So MicroStrategy underneath this 359.50, if it can reject, I would certainly at least be open-minded for a scalp, if anything, through this thin structure rotation. Probably looking at a breakdown scalp underneath. Let's just throw the level on. Something like 353.60, excuse me. Under that certainly gives you the shot at this pullback here, right through there. And you could like change your tone and say, okay, no, but the double bottom on the hour, that's fine, right? I'm not saying it's impossible there, but first thought is, do we get a rejection? Daily 200, neckline retest, Brigade bolt. I mean, I think that's ripe for the picking. If even if Bitcoin just pulls back, right? I think you get that MicroStrategy move, which is no longer micro. Let's take a look at Circle. Speaking of stable coins, crypto, the whole 9 yards, what's going on with Circle? Look at the daily chart, just drifting underneath this, of course. So on Circle, underneath these lows, I think things get really interesting for continued retracement back down towards the breakout point here at 118.80. If you take a look at the hourly time scale, right, your previous support acted as resistance, overshoot, failed breakout. That's that upper wick we just saw on the daily chart. Therefore, consolidation here is bearish. Any Brigade bolts underneath 129.30 should rotate to target 118.80. Final trade idea for you is on Oracle, another usual suspect of the channel. I think this is actually a potential long to play catch up with some of the semiconductors if, asterisk, there it is on the screen, if the semiconductor sector, SMH, does also see an uptick this week. It's a thin structure retracement through this zone right here. Okay, target's going to be 243.25 on the premise of a daily 50 SMA hold, inside candles breaking out. Let's take a look at the hourly chart. If this is going to be your double bottom, mild pullback here, you could, if you like trend lines, that's fine, do your thing. Trend line break over this pivot high right here, break over the highs of that Friday session. Probably get this going in the upward direction, or at least where I would be interested in taking the trade. Let's do a little level reconfiguration. Thanks for bearing with me. Right, there's your double bottom, pull back over the neckline, Brigade bolt over previous day's high, then structure retracement, 243.25 target. Okay, that is Oracle if it's going to play nicely. Obviously not directly a semiconductor, of course, but in that whole sphere of influence, AI, semiconductors, the whole 9 yards. Okay, that's Oracle. That's your final and third trade idea for this week's episode of the Weekly Watchlist. So, if you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. We don't really have many major catalysts in the pre-market this morning, or this week, I should say, but we will be live, as we always are, every morning at 8 o'clock a.m. Eastern Time for another episode of the pre-market prep. So I hope to see you there. Come on out to the show. We'll build a game plan. We spend a lot of time, a majority of our time on the broad market, making sure we get the game plan right for the indices. That way we are trading with the winds at our backs should we choose to trade individual equities over here. If you're interested in coming and hanging out for live commentary as the markets actually open, feel free to check out the links down below in the description. I'm sure those who are interested have already found, of course, the link they're looking for, but all the stuff is there. You can check it out at your own will, and that's all I've got for you in today's episode of the Weekly Watchlist. So with that, have a green trading week, and as always, I will see you in the next one.